down. Bear down, Chicago Bears.
Steve, we're live.
Oh, sorry. Hey, market trends, January 12th. We have big stuff on the horizon. Compass, we thought the deal was going to close late in the year. Guess what? It closed in early January. Trump makes a couple of moves. Could it move the market? We have Fed Chair Jerome Powell making comments. What will that result in interest rate drop or rising? And then finally, the Bears' victory, Matt. That's what finally. The Bears' victory. A great victory. Market trends coming right at you.
I love it. I love it.
Well, welcome to the People, Not Titles podcast, our market trends edition for January 12th, Matt.
Yeah, January 12th.
Excellent. Matt, we have a lot of great things to cover. Compass closes all stock acquisition of Anywhere Real Estate. This is a surpriser. The deal is done, Matt. Let's talk about it.
Deal is done. Just last week, we reported and said, wheels are in motion. Shareholders have approved this, but it's going to be maybe
lawsuits.
Right, second quarter of this year approved. And lo and behold, I believe on Friday, the announcement was made, and it's a done deal. So in essence, Compass has finalized their all-stock acquisition of Anywhere Real Estate, and they are now, on paper and in your market area, the biggest real estate company in the United States.
Yes. Well, kudos to Refkin for being able to get the deal done, and Anywhere Real Estate. Congratulations to them, Matt. We thought with lawsuits, the Department of Justice with antitrust and monopoly and such, that it's going to take a lot longer, but the deal is done.
Deal is done, and Robert Refkin, who was the CEO of Compass, is now the CEO and chairman of the newly combined company, and I forget what it's called, Compass International Holdings.
Yes.
It's just not in the U.S. anymore because with App Properties and Christie's International, they are worldwide. So
they're big, they're nationwide, Matt.
You know, and Steve and I tried to do a little analysis here in the Chicago marketplace to come up with what the market share of Compass and their related companies now, when you put in as well as the legacy brands, Coldwell Banker, Century 21, et cetera. Mm-hmm. We don't have a number. I'm going to say at least 50%. And in certain select suburbs, I heard over 80%. So this is going to be interesting.
Yeah.
And as Steve said, the anti and regulatory concerns that we were talking about last week that was going to hold this up to the second quarter of 2026, magically they went away.
Yes.
They were done. And there was a waiting period that expired on January 2nd, and without the Department of Justice or FTC issuing a formal complaint or what's known as a second request, it went through.
Yeah, Matt, so I wonder, did the DOJ just not see anything and thought, we're going to conserve energy, or did they drop the ball?
So there was concerns. There was some concerns by some of our elected officials. I forget, Elizabeth Warren and someone else had raised some red flags from the legislative side of it. But Compass did the right thing, and with this administration, found the right attorney to get to the right higher up in the current administration. And to make a long story short, they said, we're good to go.
Yeah, what you got to do.
Do what you got to do. And we anticipated that this would be
a
no-brainer, that it would be approved. I think you and I are just surprised at the timing of how quickly this came about.
Such a big transaction. And Matt, I know we speculated that in certain markets they might have to offload certain brands or whatever it is. So we talked about it last week, but apparently not. And, I think for, a couple of things thoughts that I have, Matt, and then we can get into some further details of it. Number one, will bigger mean better for the consumer and better for the agents that are working with them? If no, then almost who cares besides shareholders?
Right. So it's moving forward. Apparently, the Department of Justice can go back and say, yes, there is some antitrust issues after the fact. So we'll keep an eye on what happens with that. But it's a done deal. Shareholders have approved and moving forward. And so once the deal was announced, Robert Refkin put a nice long piece on the company website that sort of was a message to all the new Compass agents, the legacy Compass
State of the
agents.
Union message.
So here's some of the highlights that he talked about. His vision is to empower real estate professionals with a unified modern tech platform. Obviously, that's what Compass is all about, the technology.
They've been talking
and
about that for a
integrating
long
it.
time, Matt.
Yep. And this is not just a merger of companies, but a unification of respected brands and top talent. So Refkin claims once again that he is going to preserve these brands. Compass says that anywhere franchise brands will be preserved, with affiliates retaining full independence over how they operate. How do you feel about that, Steve?
Well, here's how I feel about it, Matt. If all the tools, all the technology is going to help everyone, I wonder if I'm a seller, if I'm a buyer, and I'm interviewing an agent. If I interview a Compass agent, am I also going to interview a Caldwell and an @property agent as well? Or am I going to say, I've interviewed one from that group, now I'm going to start interviewing some independents and others? So the question will be, will the independent nuanced brands be able to keep their identity and keep their unique value proposition? Otherwise, it's just one bucket. If I interview one, I've interviewed them all. And I think from a person that's working for an independent or a different brand, I think that's a way to come against them, sell against it, or whatever it might be, because you can establish yourself as unique from that group. So
100%. And the way I look at this is sort of the Procter and Gamble product approach.
Absolutely.
You go into the grocery store and you want to buy laundry detergent, you see Gain over here, you see Tide over here. It's all the same company.
Yeah, they don't pouring into different bottles.
So that, in my opinion, is the approach that, on paper, this is what they're trying to do.
Yes.
Is we have all these different brands. You could talk to any agent in any of these brands, but we're going to get you one way or another.
Yes.
And if you're a competitor, absolutely, I would differentiate myself and say, I'm interviewing to get your listing. I am part of this brokerage that is a standalone, or however you position yourself. I am not part of this Goliath that is part of the Compass network. That, in case consumer, you didn't know, Compass is this, and this brand here in the Chicago marketplace. Did you know that? My hunch is that home buyers and sellers may not be aware of what's happening like we are.
Absolutely. And just like Procter & Gamble, you buy one or you buy the other, and I don't think many consumers don't realize how it's all under one big umbrella. But I think that's something an agent can point out. And I think the consumer will look at that and go, that's kind of seems weird. Everyone under the same tent but flying different flags. So we'll see how it shakes out. Matt, I thought Refkin's stance on private listings, that's kind of shifted after we the big reveal last week, Matt, where we said that there was limited benefit, if any at all, from bringing on the private listing network. That bears itself out in the numbers. So Refkin seems to be backing off of the PLN stance.
Yeah, so his statement to his agents is there's no mandate that you have to use our private listing network. So we'll see how that goes too, because he seems pretty gung-ho about it and trying to push it through. The leadership, there is no immediate things of what's happening with the Compass leadership. As Steve said, Robert Refkin is still the CEO. He is leading it. He is the founder of Compass. But I think there will be a shakeup within the Anywhere real estate leadership as they come into the fold and under the tent. In terms of stock, so this is a publicly traded company. When this announcement took place, the shares of Compass stock actually went up about 10% to over $13. And today, it is down around $12.30.
Okay.
As we speak. So down a little bit. It's not a huge market mover in my opinion.
People don't see that as going to be a windfall of profits.
Yep.
And they're going to still have to grind for their business.
So it's moving forward. You agents out there who are not part of the Compass network, keep your eye out of what's happening, position yourself appropriately. And if you are part of these companies that have now been acquired by Compass, as Steve and I have evangelized, do what's best for you and your clients from a brand perspective of who is providing you with the resources for you as an agent and a broker to provide the best quality service for your clients.
Yeah, I think if you can keep your individual identity, with which a lot of agents can. Agents move from company to company, but people remember them. But if you're a younger agent, Matt, and you're trying to establish your identity and you're under this getting lost in the sea of agents, it might be helpful for you to separate yourself, create an independent, work with an independent or whatever it might be. Matt, next story is CoStar scales back on their homes.com spending. CoStar, let's talk about who CoStar is, where they were, and then what's happening now.
So CoStar is a huge behemoth in the real estate industry. They own not only homes.com, but apartments.com and other properties
out there. A lot of
there.
flashy advertisement they've had, Matt, with a lot of Hollywood stars.
Correct. So a couple of years ago, they really launched this huge national ad campaign.
Super Bowl.
$1 billion that was launched at the Super Bowl with Eugene Levy and Heidi Gardner as their spokespeople. They are still on TV. I know they've had Morgan Freeman as part of their ad, so they spent a lot of money
Big ticket
on
people, Matt.
And they apparently are now realizing that when you spend so much money on advertising, it doesn't necessarily translate into stickiness. And the shareholders sort of looked at this and say, maybe this isn't the best way to spend our money, or the leadership. So,
Matt, you know, my thought is right away that they could have went maybe just a little tier under, got themselves a Matt Lombardi to speak on these commercials, and it would have probably been more effective now that your personality.
Yeah, maybe. You know what, you and I'd say that we're a partnership.
It could be.
Here.
We're available. We're available, Matt.
That's right. So they spent a lot of money, and in sort of just an opinion here is if they put even 25% of that money into the infrastructure of the website and the app, that probably would have been better. But they decided a couple years ago to put this all into their marketing and advertising. Big splash, lovely. But now there is a major pullback after spending hundreds of millions to compete with Realtor.com, Zillow, Redfin. CoStar is cutting Homes.com investment by 35% this year and will reduce spending by $100 million each year over the next 10 years. And this came.
No, you go ahead.
I was going to.
No. Yeah. Hey, so Zillow and Redfin, who got bought by Rocket, right? They have shifted to, we need to make, Zillow's extremely profitable. They grab everything that's on the table. And Rocket buying Redfin has now made them worthy and profitable, even though they've operated for years without it. And I think CoStar's looking at it and saying, what are we doing here?
Yeah. I mean, they're obviously in a competitive field, a competitive space, and they're looking at what's best for the industry and shareholders in their company. And they published something which I never heard of, an 8K filing, which, Steve, an 8K filing is a report publicly traded companies have to file with the SEC to announce major events that shareholders should know right away. So that's how we know, because this was publicly filed by CoStar to saying, here's what we're doing. And so profitability, CoStar is not or the homes.com is not profitable, but they expect revenue exceeding expenses by 2029. End of the spending spree. That's right. In early 2024, they launched a $1 billion ad campaign with the Super Bowl, calling it the biggest marketing campaign in real estate history. And it probably was.
Yeah.
Made a big splash, and now hundreds of millions have been spent, and despite calling Homes.com a part of its key residential strategy, CoStar is cutting its net investment by $300 million this year.
Matt, and I do believe, although Andy Florence kind of talked to him, the Google for life in the U.S., right? That's what he was. But now they realize, whoops, Google's getting in now too. We announced that last week. So there's a lot of big players, a lot of big money that have profits enough coming from other places for Andy Florence to look at it and go, wow, we're not going to be, now with these moves, we're not going to be profitable for 2029, 2030. Not a very sexy business for him to be in.
Yeah, so there's some divestment. I'm eager to see what happens, if there will be a Super Bowl ad this year, and if the tag team of Eugene Levy and Heidi Gardner will still be every day on TV and the sporting events that we're watching. So more to come on this. I don't know if there's anything else you wanted to cover.
Nothing more to cover on that, Matt.
Yeah.
Let's go on to the big topic, which is Powell on housing affordability. The Fed Chair Powell speaks. People listen. Let's hear it.
So just a couple things, and this came out recently that Jerome Powell, poor Jerome, we're going to talk about him, says interest rate cuts are not going to fix housing affordability, and the U.S. is dealing with deep, long-running housing shortage. It's a structural problem that we all know about. We've talked about pretty much every week.
Absolutely.
It's a supply problem. Powell emphasized that limited housing supply is the main obstacle for buyers, and the U.S. is short between 1.5 to 5.5 million homes. closing the gap could take a decade or more, and lowering interest rates, as we've talked about, is not the magic bullet to make this happen. And what he says the Fed can and can't do, Fed can raise and lower interest rates that are obviously going to affect short-term and long-term rates and mortgage rates, but the Fed does not have the tools to address structural housing shortage, and monetary policy is designed to fix supply-side housing issues, but not the structural side of it.
Yeah, Matt, and the Fed did impact housing when the rates were way down and everyone locked in. And so I think he's kind of right here. I think this is more of two rails, is what I'm hearing is. One rail certainly is interest rates that get people fired up about buying houses, provide confidence and affordability and those kind of things. The other lane is clearly supply. And I think we're going to cover a story on how Trump's trying to affect that whatever way they can.
The People Not Titles podcast is brought to you by Land Trust Title Services, your partners for results.
They can. So anyway, it's not maybe a separate lane, although, Jerome Powell's kind of trying to divest himself of any responsibility of this. He is saying, hey, it's not the only arrow in the quiver for getting housing going, but it is one. Let's not pretend it isn't.
And we'll gin up what we call and what is known in the industry as the lock-in effect.
Yes.
Where about half of all mortgage holders have rates under 4%, and roughly 80% are paying under 6% on their current mortgage rates, which creates the locked-in effect of why would I give up this great rate when I have to go up a little bit? But things are turning.
Things are turning, Matt.
So we'll get to that. Key takeaway is rate cuts alone will not restore affordability. And as we're talking about this, poor Jerome Powell and the Fed were subpoenaed and hit with a subpoena by the Department of Justice on Friday, saying that they are doing a criminal investigation on him and what's going on with the department.
Yeah, Matt, and so this criminal investigation centers around this new expansion of their facilities, which him and Trump got into. Trump had his hard hat on, and they got in a tit for tat about it.
Right.
And Trump said it was one number, Jerome Powell said it's this number, and Trump said no, this number, and all this kind of thing. And here's the long and short of it, in my view, Matt. When you are spending other people's money, you really don't care how it's being spent. We've seen this ad nauseum across the board. And so, I go back to Andrew Holmes and his mastery program, teaching investors to buy and hold properties and rentals. And his magic to the program is, it's not what you sell the property for, it's what you buy the property for, and what you invest into the repairs and getting it back up to snuff. And so these people are meticulously crunching every numbers on small deals. My sense is when government gets this, they're not crunching any numbers. This is bing, bang, boom, $100 or $1 million toilet paper holder or whatever it is. And next thing you know, you got hundreds of billions or millions of dollars going into renovating a building. And so I hope they find out where the money is going and how it's being spent, and someone has to answer for it.
And so if you want, Jerome
That's
Powell
strong,
actually,
Matt, I know.
He actually put out a video saying this is BS. I didn't do anything wrong. The money was approved, and this is just retribution because Trump hates me, and I'm not, and we have not lowered rates like he keeps hammering us to do, and we are independent and need to remain independent. So poor Jerome getting hammered, and he's got, let's see, January, February, March, maybe 4 more months if he's able to make it that long.
Matt, if he spent his money wisely and if he's overseeing this project and has done it wisely and efficiently, he has nothing to worry about. Okay, Matt, Trump wants to ban institutional investors from buying homes. Yeah. This came out of the blue, Matt.
Yeah, so Steve and I have reported that the federal government is looking at ways to improve housing, affordability, inventory, all those things that have sort of stuck in the marketplace. And so out of left field, out of the blue, President Trump announces a plan to ban large institutional investors from buying single-family homes with the goal of improving affordability. Just some context here, Steve. There are investment groups out there that own large swaths of homes.
Yes.
Depending on certain parts of the marketplace, they own more than others. So using the Southeast as an example, North, South Carolina, Atlanta metro area, Phoenix, Austin, cities and areas like that, they have more institutional investors in the housing market than we definitely do here in the Chicago marketplace, as well as in the Midwest.
Yeah.
So from Chicago, from a Midwest perspective, it's not going to move the needle much with anything, but in other parts of the country it could. A caveat is those companies that own their current portfolio of properties, they get to keep those. You can't buy more, I think, is what the game plan is.
Yeah, they're limiting that going forward. Matt, and I think in Chicagoland, big institutional investors tried their hand at it. And as Andrew Holmes and Mastery pointed out, that the Chicago market is very nuanced. That's why it's so favorable for investors to get involved here, is because the big corporations have stayed out. There are some wholesalers here, but they're all working with small-time investors. And so Trump is saying no more institutional investors buying large swaths to limit the supply for individual Americans who want to, pursue the American dream.
Yeah, and like I was just saying, and what Steve were saying, this came out of left field. It was just sort of nowhere. The CEOs of these companies, who are supporters of the administration and President Trump, they view him as a real estate guy.
Yeah.
They were like, "Hey, what are you doing?
What are you doing to your buddies?"
This is not the way to operate.
That's actually a good sign, Matt. You're not just letting your buddies know or doing something because your friends are going to benefit from it.
And so these companies' stocks went down. They were sort of blindsided. So we'll see what happens with that. These large institutional investors came about. This wasn't that prevalent until the crash of 7, 8, 9.
Yep.
And that's when these companies were formed to really buy up large swaths of property that were foreclosed in these areas.
And because most of these banks and all that were busy bundling them up and trying to get someone to buy them, Matt, because they wanted to get them off their books as well.
Right. These investment companies and groups, I think, did a service because these houses were going to sit there and stagnate. And we say, people, you need somewhere to live. So they bought large numbers and quantities of these homes. But now they've divested a lot, and I think it sounds good.
Yep.
I think the industry itself it's like this isn't going to move the needle. It sounds good. So we'll see what happens.
We'll see what happens, Matt. I thought Trump had some great quotes on this. He said the home ownership is the pinnacle of the American dream. It's now out of reach for too many Americans, especially young Americans, which we've been talking about. He must be watching the podcast, man.
Absolutely.
Yeah, and then he also said people live in homes, not corporations. And Matt, this might be as the administration works to make housing more affordable, as interest rates rise, as the economic opportunities improve in America, this may be more of a preemptive to go forward than it is something to clear them out of it or whatever it might be. Matt, let's go on. Fannie and Freddie, this is substantial that Fannie and Freddie are going to buy or have bought mortgage bonds, $200 billion. Let's talk about that.
Yeah, so last week President Trump announced that Fannie Mae and Freddie Mac were going to buy up to $200 billion in mortgage bonds, which really positively impact the mortgage industry, the rates. Rates actually went down under 6%, and they are still holding today under 6%, which we said that's sort of a magic psychological number. If rates can stay under 6% for a substantial amount of time, it's going to move people off the fence.
Yeah, Matt, and I think as we get into the spring market, when people see that 5 in front of the rate, if it stays like that, it could be a needle mover that makes the coiled spring pop.
Exactly. I always like when President Trump says stuff because it's usually going to get your attention one way or another. He claims that these GSEs have amassed an absolute fortune and ordered them to deploy their reserves into mortgage-backed securities, a move that increases their market risk if the housing market softens, but we don't think it's going to soften.
Yeah.
Bill Pulte, who's the director, says, he put, I think, on X, "We're on it, Mr. President. We're going to do this." So the move recognizes that while the Fed has cut short-term interest rate, it does not directly control mortgage rates, which depends on investor demand for mortgage-backed securities. As we just said when this announcement was made, the mortgage rates on the 30-year fix went to 5.99, and today they are probably about 5.8 to 5.9%.
Exciting time, Matt.
So hopefully it could stick around there.
Matt, Lawrence Yoon from NAR also commented, I think he likes the move as well.
Yeah, NAR supports this for sure.
Yeah.
They're one of the industry groups that thinks that this has legs.
Okay.
As opposed to the corporate.
And I think even detractors through gritted teeth, detractors of Trump through gritted teeth, have said, this is actually going to substantially move rates. An eighth, a quarter point, or whatever it is, and it's not just a little bit of a fix. It is an actual solution.
Right, and so I like that this is positively impacting mortgage rates.
Yep.
I just hope there's some stickiness to it, that
Absolutely.
This actually holds true and holds it down, because the Fed, based on what we're seeing, may not be lowering interest rates anytime soon, or they may be if Jerome Powell is out.
Matt, and let's get into that. Latest unemployment and job growth figures released on January 9th. How does that portend for us?
So this is always important from economic updates. The Fed looks at these data points, as well do other government entities. And so I think President Trump accidentally put out this data a day early, and people were like, what are you doing? But here it is.
Yes.
So
the big reveal happened the day before it should have.
You're right. And so on the positive note, unemployment dropped to 4.4%, and that was down 0.1% from 4.5% the month before. And that is easing some of the Fed's concern about the labor market weakness. Unemployment, we want that at a low rate. It's been pretty low historically over the last couple of years, hovering 4 to 4.5%. That is good. Mm-hmm. Now, here's where some issues may come in, which is job growth is softened. Mm-hmm. And in December, only 50,000 jobs were added, 60,000 were expected. And for the calendar year of 2025, only 548,000 jobs were added, compared to 2 million the previous year in 2024. Mm-hmm. So we want jobs to be created. Manufacturing really slipped off according to the stats. Mm-hmm. Healthcare, I think, has continued to be on the rise. That's the shining star. Manufacturing, which we want as a country, is lagging right now. So hopefully that picks up as we progress with what we're doing with the economy in our country.
Matt, traders are now seeing just a 44% chance of an April cut. We talked about that we might even see one sooner, but maybe not. And we know that Powell's term ends May 15th. Yep. And so there's this tension between, is he going to go out with a bang, or is he going to go out with just a...
So if my prediction is, if Jerome Powell makes it to May 15th, mm-hmm. he is not going to move rates at all.
Okay.
He is going to stick it to Trump, because there seems to be some bad blood mm-hmm. between them. There is bad blood between them. Yep. And he will go out, in my opinion, that way. And then the new crop, the new chair, and the new people
will come in June,
and you'll get a nice rate cut, and people will be clapping and celebrating in the streets.
Matt, and who knows, with the $200 billion in mortgage-backed securities purchased by the government, if Trump sees, wow, that equals an eighth or a quarter of a point, he just might allocate some over these next few months to force rates down. We'll see.
So yes, the bottom line is the administration at the federal level is, I think, making key efforts on the housing front to address some things. I'm not sure how they're going to stick, mm-hmm. but I think this is a good start mm-hmm. to get things moving.
Matt, and I think as buyers and sellers see, it's not going to get out of control. We're not going to go to the 6, 7s, and 8s, and I'm going to wind up with properties I can't offload or whatever it is. They're going to start to throw their hat into the ring, into the market, and say, this is a safe market to get involved with because someone has their hand on the till.
Yep. I just hope there's some sustained under 6% mortgage rates to see how that positively will impact the market, because we've been waiting.
Yes.
A coiled spring,
a
Matt. Tsunami, whatever we want to say. We're waiting for this positive part of the real estate industry to come out. It's mm-hmm. been, in Chicago, we talk about the positive price appreciation over the last 12 months plus, but the sales have been stagnant now 3+ years in a row. We need that tsunami. We need that coiled spring to pop.
Matt, speaking of coiled spring,
The most
the
important thing.
tsunami, the unexpected now becoming common. Let me
Get
break
it?
it out, Matt.
Get
I gotta
it?
bring it out.
Got it. We've been waiting for this.
We've
and
been holding out for this moment, Matt.
So Steve and I have been joking, and I said we shouldn't even talk about real estate this edition of Market Trends. We should be talking about this, grating the cheese.
Grating the cheese,
The
Matt.
cheeseheads. We love you, cheeseheads, but at
love
the
ya.
same time, we love to beat you.
Yep, my cheese grater hat is on order, Matt. The Bears came up with an improbable victory on Saturday night that set the town afire, Matt. I said it and you said it. It was the most exciting Bears victory since 1985 in the Superdome when they won the Super Bowl.
So fun to watch. I will say at halftime, when I looked at the probability, it was against the Bears 94.5%. Green Bay was likely to win the game according to ESPN stats. And as the game progressed, someone put on TikTok how it just shifted, and then by the end,
The tide turned. Green Bay is out. Matt, we've spent a lot of painful years as Bear fans watching Brett Favre and Aaron Rodgers chew us up. And so this is our day in the sun. We're going to enjoy it. And I think with the young Bears team, Caleb, Ben, Colston Loveland, and all the rest, DJ, and all the defense, which, that is another story. But we have an exciting game heading into this weekend, Matt. We have playoff football in Chicago at home heading into the NFC Championship game.
So the last time the Bears played the Rams in the playoffs was, I believe, 1985, when Eric Dickerson was the star running back.
Yes.
And it was nice and bitter cold, if I recall.
Absolutely.
And he didn't run for many yards.
24-0 was the final,
They
Matt.
couldn't pass. And so let's hope for the same.
Let's hope
Little
for
Bears
the same.
weather. I want that swirling wind where Santos can play the wind. And
Absolutely.
and I don't know who's kicking for the Rams, but I guarantee he's not going to be able to hit it. So
You got it.
It's exciting times here in Chicago for football fans, Cubs fans as well. We got some signings, some new players. Bregman signed. So it's just, we're in a renaissance.
We're in a renaissance.
The Blackhawks are on the upswing.
Oh, yeah, the Bulls, who knows, but whatever.
But yes.
Yeah, okay, well, listen, Market Trends, January 12th, signing off. Matt Lombardi, Steve Kaempf. We'll see you next week, hopefully to talk about interest rates dropping and a big Bears victory.
Take care.
Hey, thanks for listening to the People Not Titles podcast. We are proudly sponsored by Land Trust Title Services. If you enjoyed the podcast, please hit the like button, please subscribe, and we'd love it if you'd share our podcast with your friends. Thanks a lot.